Hi, this is James Shrug at Westpac with the London end of day report for Wednesday, August the 15th. A pretty quiet day in terms of where equity markets stand now compared to 24 hours ago, with a lot of the markets pretty much unchanged. I'll run through those numbers in a minute. That was despite an extensive range of economic data today. Weaker consumer sentiment reported by Westpac and the Melbourne Institute for Australia overnight, or yesterday Australian time. Concern about bad loans in China. That kind of set the mood for a softer vibe about the global economy compared to yesterday, when solid American retail sales drove a more upbeat view of where things were heading. And then on balance, today's data was on the soft side as well, particularly out of the US. There we saw flat inflation in the month of July. That's the fourth month in a row where inflation has either been steady or prices have been either steady or fallen. The headline annual inflation rate is now just 1.4%, the lowest since 2010, and the core rate's 2.1% now. The New York Fed's factory index for August fell very sharply, weaker even than Westpac's bottom of the range -2 forecast. It came in down 13 points at -6 in August. In fact, Westpac's forecast was the only negative one, only sub-zero forecast, so a bit of a surprise to the markets there. And that kind of offset the news that industrial production was up 0.6% in July. Now, most of that was auto-related and utilities. Very hot weather in July, people using air conditioners more. So take those parts of the number out, and I think manufacturing, which is basically IP X utilities and X autos, so manufacturing X autos was up just 0.2%. So a pretty soft outcome. And with other regional surveys, including Kansas City, I should say, Richmond, and the Philadelphia Fed back in July, all pointing to below zero readings, i.e. contraction in manufacturing. You know, there's a growing sense that the third quarter might be weaker than the second quarter in terms of how the industrial sector is doing in the US. We had a housing survey, the National Association of Home Builders in America. It reached a new post-2007 high, but as I say, it was more of a focus on the softer news today. In the UK, we had the third consecutive quarter of jobs growth, coinciding with the third consecutive quarter of recession. So hard to explain too, because the latest quarter saw 201,000 jobs created when the economy contracted 0.7%. Now, that implies either really bad productivity growth or something might be wrong in the data even. So a bit of a conundrum there. What we did also see was the Bank of England minutes to their August meeting. They dropped reference to the possibility of a further rate cut down the track. That was in the July minutes, but not in the August minutes. Other than that, they were unanimous in terms of the on-hold rate decision and the maintaining the target for asset purchases at 375 billion sterling. So they were the main news stories today. I've mentioned that markets weren't much changed, just running through them. We've got the FTSE, well, down 0.5%, but apart from that, the French market flat, the Spanish market flat, the Italian market up 0.9% though, and the German market down 0.4%. It's already about 8:15 in London, and we're looking at the Dow unchanged at the moment at 13,177. The broader S&P measure though is up 0.2%. That follows declines on Monday and Tuesday. So at least at this stage, at least, it's broken that two-day downswing, but only very modestly on the S&P. And the commodity markets, a bit of a mix there, with copper prices down 1/3%, gold up 1/3% at $1,608 an ounce, and oil up 0.9%, $94.23 a barrel. Aussie dollar, it's just above 1.05 against the US dollar at the moment. It was trading a little bit below 105 24 hours ago, so marginally stronger. All right, that's it for today. Back again, probably a bit earlier tomorrow, okay?